Okay, what's up guys? Welcome back with me. Don't forget to like, share, comment, and subscribe. Heavy how to determine real yield. A real yield project earn more money from revenue than token emission on operational costs. Like in any sustainable business model, the project should earn more then spent to determine which project makes a real yield. You should research in crypto project the entire revenue information in on change which makes it accessible. Crypto can add protection against inflation, but not until it's stable of fundamental and achieves mass adoption. In theory, Bitcoin (BTC) should serve a hedge against inflation is easy to access, supply is predictable, and central bank cannot arbitrarily manipulate it. However, investors are trading is that why instead to cryptocurrency market is mirroring the stock market. Why is that? Let's dive to what's preference and cryptocurrency from acting as hedge against inflation and what needs to happen to make them hedge in the future. Crypto could be a hedge but come with inconveniences. Cryptocurrencies present a unique solution given their lack of central governing bank. You can lose trust in something that does exist. Its supply is infinite. It's in natural up prices thus it's infallible. People using blockchains with proof of stake protocol can access their view at any time, will conditionally earning stacking reward on their current balance. This means that the actual value of annual percentage yield is tied to, to the economic activity on the chain via treasure and stacking reward distribution mechanic. Thus, properties seem to address the cause of inflation in the traditional monetary system, but some roadblocks remain. And real inflation goes you down 5 way to accumulate crypto with little no cost. For starters, let's examine the reasons. The reason, the way for start. Let's examine the response why people invest in hot cryptocurrencies. The majority of cryptocurrency holders see the future potential of those technologies, meaning some of their value is not currently present. They are speculative investment. The generation has been achieved by Bitcoin, but its exuberantly high energy costs remain unaddressed, and the majority of mining forces are still accredited into the dozen mining pools. Ethereum has similar issues with energy consumption and the mining pool centralization. Ethereum also has security problems. More than 1 billion has already been stolen on blockchain this year. They also this issue design and change or DXX, which the currently not fight for us uh, centralized change. The DEX with the high transaction value Uniswap over Uniswap is priced in compared with a centralized exchange. A simple trade of 1 million of Tether USDT for USD coin USDT would cost over 3,000 while the Fed slip pays the when executed on the central exchange. These are technical problems that have solutions. Granted, the issues are being addressed. Several threat generation blockchains are tackling energy consumption and the decentralization on privacy is improving. Crypto holders are beginning to accept that their wallets will always be fully traceable. This will pose exciting to new users who have previously been hesitant over blockchain's hypertherapy. project seeking to merge traditional finance mechanical rigor with the native attributes of cryptocurrency. Okay, that's all for me. Thank you very much. Don't forget to like, share, comment, and subscribe. Bye bye.